Well, GDP came out and it was a non-event. Now we have PCE tomorrow. Is it going to make a difference? Every day is Groundhog Day. We're just at this 45.63. We can see that right here very, very clearly. There's very little to say or to do about it. So let's see how this plays out. But it is what it is right now. And I don't really think that we're going to see much change anytime soon. We have to start thinking, like, what is the catalyst that's going to get us up there? You can see the DTL and how we broke it. Come right to the neckline. We have that bearish engulfing. I'm sure you guys already see this, but let's just mark it off. We've talked about it enough. So you have that bearish engulfing right at the top of the DTL, fits there, flips, and then you just go sideways. And you're just sitting here. Now, the question is, why are you doing this? I think you're doing it because we're rotating. And I think we're seeing that rotation pretty clearly in the market. We're going to get into that rotation right now. GDP beat substantially. PCE is tomorrow. I am not going to spend a lot of time on that. We all know that it beat. If you don't, it beat. It came in higher. We're looking at backdated data. We have to go forward. Take a look at some other data that was way more telling. So instead of focusing on GDP that we all know came out and beat, and if you don't, this is what we were looking for, what we're going to pay attention to is what the heck is going on out there? Well, for starters, German CPI was supposed to come in negative 0.2, came in month over month 0.4, 3.5 year over year, came in 3.2. This is another measurement. I don't know exactly what it is. I know it's related to inflation, but I do not know the differentiation between HICP and CPI. I could look it up, but obviously it's tied to inflation. You can see how it acted and what happened here. Once this happened, after Spanish CPI came out 3-4 hours earlier, and that again was a miss across the board. It was a huge miss in here where you actually were negative in parts where you weren't supposed to be. In other words, CPI came in at negative 0.4 month over month, which is pointing to deflationary versus what you have going over here at 0.1. Now we have RPCE tomorrow. We would expect that to be down. You never know how this is going to play out, but we're expecting that. So we're going sideways. We keep talking about that we're toppy. Let me rephrase that. I keep talking about that we're toppy. I keep pointing at this RSI saying it's going to break, we're going to roll. There are some signs here that this is an issue, that we should at least come back and give some back. And I'm looking for something orderly. I'm not looking for this. I'm looking for something orderly that we could just kind of work off of and maybe backfill a little bit. If we just look at the most simplest of averages, I mean, getting down to the 12 and testing that would not really be the worst thing in the world. Getting to the 22 would not be that bad, to just scare some people and see how it goes. I hate to say it like that, but I wouldn't mind seeing something like that. Now, a lot of people were hyper-focused on a couple things today. Number one, they were focused on the Nasdaq. They were focused on software names. They were focused on NVDA. We were as well, but we were focused on other sectors, and we're going to discuss some of that. The NQ, what exactly are we doing here? And I just want to point something out. When you see a chart like this, and I'm going to talk out of both sides of the corner of my mouth right now, there's two things going on here. Number one, this RSI and the fact that it won't crack. I have signals going off that are telling me that we're getting toppy and that this is going to roll. And it's giving me literally and very close to giving me an intermediate sell signal. I'll walk through parts of it on Saturday. Some of it's proprietary and I'm not going to go through it, but other parts of it, it's getting there. And I keep waiting for that shoe to drop. I'm waiting. And sometimes I'm early. If you watch these videos, sometimes I am. I'm early. I'm not perfect, that's for sure. So if you look what's going on in here, and how we're trying to get through, what are we looking for and what's happening? I think we're eating up supply. Now, why do I think we're eating up supply instead of just rolling over? So let me answer that with this. So let's take a look at cloud and let's look at this. Let's get rid of this for a second. We all know what's going on with cloud, but we have PANW was down and now we're up 50 points. So clearly, let's clean all this off. Clearly, they want to buy this. Now, you'll remember these from if you get the newsletter or you've been getting the free newsletter for some time. We used to talk about these all the time when we had what we would refer to as a bull market. But you have a channel right up here that you could get to. You had another channel right here that was a little lower, and you can see that right here. 1, 2, 3, and then you break. When you flip these upper channels, you have the ability to go parabolic. I didn't believe it because of the way the market was acting, but I think we're rotating. Take a look at ZS. ZS gaps down. This is a weekly. Let's go to the daily on this. So we gap down, and then after we gap down, what does it do? We just go up all day. Now you get this wick up here, and people are like, oh, well, that's obvious. That's a top. Is it? Or are they just done squeezing? Are they going to come back, backfill, and go higher? I mean, that can happen. Take a look at Crowd today. Crowd was murky, to say the least. I actually owned stock after hours around 208, 209, and I closed it because I didn't want to go into the conference call that way. Why am I telling you this? Because look at what happened today. And so you start looking at these patterns, and I'll just give you another one. So you start looking at these channels, whether or not you like them or don't like them, I don't really care. They're there. And so you start seeing them 1, 2, 3 flips, and then you got a little doji here, and then boom, breaks out on earnings. Now we're making multi-year highs on software names. So at the same time that's going on, what is the SOXX doing? It's not breaking down. I keep waiting for the SOXX to break down. I keep waiting for NVDA to break down. I was 0 for 3. People, when I show trades, you should understand that. Not everything I do is a winner. I was 0 for 3 yesterday trying to find a NVIDIA short, and it just did not work. And it clearly should have worked. Well, let me rephrase that. I thought it should work. And this is from somebody with a long position in it. So look at how this is going in that DTL and how you're working this off. Now here, watch this. So you go take a look at the SOXX, and then you start drilling into this. And we're getting these wicks, like we're going to break out and then we're rejecting. We're going to break out, we're rejecting. So what is this telling us? I think we're just working off supply again. I don't think I'm going to see what I think I'm going to see. Now, we'll see how this is going to play out, but I just think people are so out of position because of the bond market, they're rotating. And this rotation is spreading across different fields. So if we take a look at, for example, Apple, we're not really going anywhere. We're going sideways. Right? We're going sideways. We're not really coming down and even retesting the neckline. We're not even retesting this. All right, so then we take a look at other names and take a look at Microsoft. Okay, well, do we even make a lower low? Kind of, and that's in the software space. Okay, so now we know that XLK, I'm getting somewhere with this. Bear with me, it's important. Now you're seeing XLK hit a high, and we're talking about we're toppy. It hit a new high today, and we're talking about XLK is toppy. My concern is there's froth in the market. We're going to discuss that froth, and is that something we should be concerned about? I'll save you a lot of time. Yes, it's something we should look at. But we are rotating. And as that rotation continues, I think it's a healthy sign for a market. So when you look at the market and you realize today was biotech day, and biotechs are setting up, and now all of a sudden XBI, which a month ago nobody would go near, left shoulder, head, right shoulder. I mean, is it the most beautiful thing in the world? No, but it's got personality. So you see what I'm getting at here? So left shoulder, head, right shoulder, neckline. So when you look at it that way, now you're looking at a different chart. When was the last time that we were above, that we broke above the 55? And you're doing it coming into December. So this is one sector I'm really interested in owning in the January because I think there's going to be a ton of tax selling. All right, so they're buying biotech. They're not buying other names. So then you start going, okay, well, what's going to drive the semiconductor rally, the S&P rally, because we all know what it's not going to be. XBI is not going to drive the rally. What do we need? We need financials. What are financials doing? Let's get rid of my 1,000 lines for a second. Let's get rid of everything. And let's just pull this down and take a look at this. All right. And let's just go back to 22. Because if we go back any further, we know that we had what? $1.7 trillion in the market. So we know that that doesn't work, right? And we look at this line, and then we come up here, and let's go back to about here, because that's 22. We can actually go back to here, because that's still in 22. And that's still going to give us the top of that base. And we can see the battle of that base, right? Look where you are. Isn't that crazy? So if we're looking at this, what do we have? Well, some people are going to say, oh, you're at resistance. Okay, are we at resistance? Or do you want to have this conversation and say, are we at an inverse head and shoulders that's a multi-year and we're getting ready to break out? I don't have an answer for you. First time you failed, second time's the charm, right? I don't have an answer yet. But then you drill into it and you go here and you go, here's Goldman. Let's clean all this off, reset, and we're going to clean all this off. And now here's Goldman. Well, what's Goldman doing? Ripping, island reversal, continuation, island reversal, makes a new high today. Oh, it didn't close at a new high. I think we're starting to get a little picky, and I do think we're at the same time that we're a little frothy. But at the same time, I'm telling you that we're frothy. The market's not looking like that. So here, this is S&P stocks above the 20-day, and I wanted to get into this tonight. We're not at 90 anymore. We're at 79. We backed off. Now, when you're at 90, it does not mean that you're automatically going to fall down and get back to 10. There are times here where you can get to 90, work it off, and come back. Work it off, come back, stay up here for months. So the 20-day is a little different. But we like to look at all of them, don't we? Because we want to see what's going on. So the big one to look at is the 50. Because if the 50 gets up here, then usually the 50 takes a long time to come back. Usually you get back into this trough before you go again. And then after you're in this trough, usually you come back up into that 90 range. And we can see that. Let's pull this back to 22. And we're not going to go back further because we know that there was $1.7 trillion in the market. So if we can see this here, we hit 90. Comes back down, 3. Okay, this is S5FI. And the purpose of me showing you this is percentage of stocks above the 50-day. So here you are at 92, and you came right back down to 7. 90, but before you got back to 90, what did you do? You got to 18. After you got into this little gray area with 18 being the cutoff, you got back to that 90, 89. We're not going to split hairs. Here you are into the gray area. Where are you? 76. How many times have we gone from this area to not hit 90 since 2022? How about zero? Okay, zero since you've been in here. It hasn't happened. Now, it's only happened 3 times. You could go back and look at this historically, and you're going to see it even more. All right, you really want 30 pieces of data before you come out and say something has statistical significance. So before the statisticians come and make the comments, I'm aware this is the hand I'm dealt. I can only play the hand that I'm dealt, and this is what I'm looking at. All right, so let's drill into this a little bit more. I know you guys like when I say that. So here we are with stocks that are above the 200-day moving average. Let's clean all this off and go, all right, what is the most decisive thing about stocks above the 200-day moving average? Number one most decisive thing is the 50. Are we above the 50? Yes or no? Why do we care? Well, go look at when we broke down and what happened to the stock market in September. Go look what happened when we broke above it June 7th. Go look at what happens when we broke above it here in November. Go look at what happened January 5th to the market. Okay? This leads every great rally. Every great rally you've had this year has led with us getting 50% of the names over the 200-day moving average. If you think about it, that's not rocket science. A lot of people will not buy a stock unless it's what? Above its 200-day moving average. The more stocks above the 200-day moving average, the more people are going to buy. Does that make sense, right? I know it's a rhetorical question because you're just listening, but hopefully you get what I'm putting down. How many times in 22 were we above the 50? No, we got Matumboed, okay? And here we're seeing the exact opposite. So now when we're getting above the 50 in 23, what happens before we revert? Well, it seems to be a level, 75. Are you near 75? We are not near 75, he says to himself. So what does all this mean? Yeah, we could sell down. We could sell down at any time for any reason. You have 2 wars going on. You have 50 days before they're going to shut down the government. At any moment, anything could happen. We all know this, but it's very difficult to look at this and say, we're overbought. Well, we could stay overbought forever. You could stay overbought for a very long period of time. And so we have to take that into account. Now, what else is driving us? What else should we be looking about? Well, take a look at RTY. Now, this is a multi-year base that you're in, and you're in the middle of it. And look at what they're doing to us. They're just having you go sideways. But what are they doing in there? What are they doing? They're rotating. Take a look at this. And this is where we did exceptionally well today. KRE, these regional banks, but not just regional banks. They're broadening out into value areas. And when they're broadening out into value areas, you're going to see something happen. You're going to see diversification, and they're going to go look at where can they park capital if the Nasdaq's overbought. It is the churn that happens over and over again where they go, okay, well, this is over, so now we have to go this way. Okay, we have to get out of semis, we have to get into software, we have to get out of XLP, and we have to get into healthcare. They're not saying we have to put money in money market accounts anymore. Instead, what they're doing is we need to buy more bonds and we need to sell equities. Okay, and then the equity market's going higher because guess what's happening? The bond buying is driving the pricing down. And you can see that, right? You might want to listen to that again. So you can see that today. Look at what's happening with the 20-year. Okay, when we started buying it back here in the community, and we were talking about this here as well, this is exactly what you wanted to see. And I think it's really important for us to spend time tonight to get this macro picture. So when PCE triggers tomorrow, you understand how you should be playing it. So if you look at TLT, look at what's happening. And I actually put this in the free newsletter. So if you don't get the free newsletters, link in description. Okay, this is when we started buying high yield right in here. Look at what it's done since. You're not going to see this again. You can cut this part of the video out and timestamp it. You're not going to see this again. So our point in buying this wasn't even swing trades. What were we doing? Long-term investments. So a lot of people that watch these videos go, he's a day trader. It's probably 20 to 25% of what I do. It's probably a little more right now considering the circumstances and where we are in the market. Look what's going on with investment grade. They can't get enough of it. Why? Because now they're looking at the tail that wags the dog and going, well, do we really want to go out there and buy the 2-year? Do we really want to buy the 2-year? Why do I want 4.6%? Do I want 4.6% or do I want 8? I think I'll take 8. I'll take the risk. I'll pay the state and local tax, which is what obviously are exempt. So I think that's where this is going. So they're going to drive this down. The VIX is not dead. The market, to me, I have a lot of signals that are saying we're overbought. Remember when I said in the beginning of this, because you guys are going to comment, well, he talked for 20 minutes and he said nothing. No, I said a lot. You just have to put it together and put the pieces together, right? This is why you're seeing like the XLI names get upgrades at Boeing, even after like bad quarters. Why? Because the dollar's dropping. Dollar drops, they buy more of our goods. Okay, so now you have this picture. What else is on the plate? Well, you have OPEC tomorrow. That's on the plate. USO, you're going to want to watch this. The deeper the cuts, the higher USO will go. The higher USO goes, the more the equity markets could drop. But the first thing that we have to get through tomorrow is PCE. You need it to come in lower than expected, and then you need to see what happens from there. I do think that there's a couple names that we should be talking about in here. Number one, you have Tesla and what it's supposed to go through tomorrow. Now, you have the Cybertruck. Everyone's all excited about the Cybertruck. Look, this looked absolutely perfect on this break. We did not fall apart here at all. You came right down here, you retested the area, and you didn't even make 50% of that bar. Come here again, here's your 50, and you closed above it emphatically, and you did not break it, and you're not 50% down on this bar, which is a big deal to me. Do with that what you will. You've been riding the 12. The 12 is about to cross the 55 after across the 22. Now, unless this truck is an absolute bomb, I don't foresee this getting any weaker. You never know with him. You never know what happens. But this technically to me looks like it's finally got a base. Here was an absolute disaster after that dumpster fire of a quarter. And long term, I don't know about the prognosis, but you have to look at this technically, and you have to like what you're seeing. At least I do. NVIDIA, we keep waiting for the break. And when I say, me and the mouse in my pocket at this point, it's just not breaking yet. Am I early the way we're riding the 12? I still have a long position. I had some puts on it last night because I thought GDP would come in high. If you watched yesterday's video, this is what I always say. We can plan. I said GDP would come in high. I said the market would sell down. What happened? GDP came in high. The market went higher. Right? Let's make that higher. There we go. So now you can always plan, but what you're planning doesn't mean it's going to happen. All right? It's like tonight we were watching the CRM and everyone's sitting there going, oh, well, this wasn't that great of a quarter. The quarter could have been better. Okay, well, the quarter could have been better, sure, but nobody cared. Okay, the stock's at 50 after hours. Okay, so you are up precipitously 20 points. Nobody cared. People want to buy software. So we should be looking at the software names. Go where the money is going. Trade what's in front of you and trade what's working. Now, I do want to point out some things that people have been pointing out, and I am in this, and I've been in this now for, I think it's day 2. I have puts married to it. So at this point, it's literally impossible with the puts married to it for me to actually get hurt. But and I'm going to walk through that in the video on Saturday. I got a lot of questions on that. And thank you for commenting on the actual video itself that's here and the screen. I did learn how to make these high resolution, so they should be actually coming in better now. It has had to do not with the screen, but with how you set the actual shot that I'm capturing. They can only do HD on on certain measurements. Anyway, look at the 55 and how we held there. Now, they're in their quiet period. I don't think they're going to be doing a secondary, obviously, but now you have earnings, and now you look at what's going on here. I don't know. I think you're going to see a lot of players out there, guys. That's a lot of volume out of nowhere. Out of nowhere, that is a tremendous amount of volume. And you can see where earnings were here, and you can see what happened in March. And no one thought this would ever go again. And then from this level, okay, all the way up to 50. So if you think it can't happen again, you're mistaken. And you look at these earnings moves. So what I did at this point is I married puts to it going out to December 8th. The cost basis on the stock is $1.12. What am I at? $12.70. And I paid $1 for the 15s, $1.12 or $1.15 for the 15s. I put some 15 and a halves too when it spiked earlier today. And I have a huge kicker on December 8th. I have like really deep, I bought a boatload of like out of the monies just in case, just for giggles. But if you look at how this is going, could it do it again? Yeah, it could. But this is frothy, right? Like this does not make you feel warm and fuzzy about the market. And then you guys saw this one today, especially if you were in the public video, the pre-market live. Terry brought it up and he nailed it. He's like, you got to look at this. And I did my cursor area. I don't play these names. And then later in the day, guess what I was doing? So, and guys were in the room and they were just crushing this thing. Gave a real simple pattern today. You could just say it and I'll just walk you through it so that if you say it next time, you can actually try to act on it yourself and learn something. So what we were doing is we were measuring these levels that were there and you could see them and how they were setting up in here. And then you start to come sideways. And then you have a reversal right here. So you mark the top of the reversal, which is right here. Why is this a reversal? It's a reversal for a couple of reasons. Well, it's not a bearish engulfing, people will say. I break out, and then this bar reverses more than 50% down on this bar. Everybody sees that, right? So I'm going to say that again for you. This bar reverses down more than 50%. What does that mean? Okay, that negates this bar when this comes down 50% more, all right? So that tells me this is now resistance. And you can see that it was resistance, and I actually stated this, we stated this in the room, and said, hey, if it gets over this, just watch. This is where it could go, and then bonk, and then they start the halting game, and people just did exceptionally well with it today. And it is what it is, guys. For me, I played around with this, but I was more focused on GME, to be quite honest with you. I have an oversized position at this point with it because, again, everything's hedged. But I will walk through that so that you guys can learn how to do that on Saturday. So make sure you watch Saturday's video. So we have to get through those numbers. What else should we cover? I don't know. We should probably cover this trade that no one seems to get yet. I think that might be a good idea. So this Argentinian trade, they are in the U.S. Now, they're not in the U.S. to sit and talk about how bad things are and to yell at liberals. Okay, they're in here for the same reason that every other country comes here, to develop ties with us. They want something. Usually it is investment or capital. They are going to tie to the dollar. That is their plan. If they tie to the dollar, you're going to have these banks out there. If you watch the video from 2 days ago, you're going to have these banks out there. You're going to have these energy companies, okay, that are trading at valuations where they are literally 4 and 5 times earnings. And there are definitely things that you're going to want to watch. Look at this BBAR and look at how it did on earnings. And then you had people sell it down on earnings. Why? Because they don't have a stool. They don't know that this is a macro fundamental and technical story. You know this is a fundamental story. You know this is a macro change. What they saw was earnings. What we knew is that they were going to take a kitchen sink quarter. Why? Because they want to write off the gains that they're about to get. If you look at all the previous quarters, they were always 40 cents, 30 cents. Stock's trading at 4 times, 5 times earnings. Current earnings, not future earnings. Okay? If you think about this, this should be a lot higher already, and it's still not. We have a position in this. We bought it here when people that didn't understand that got out of the way, candidly. I just want to say it again. You're playing against the smartest, most disciplined people in the world, guys. You have to act like it. YPF, this was another one that we've done exceptionally well with. I have a very large outsized position in this still. We've been talking about this since it started. I mean, you have an energy company that can now sell energy to anyone it wants in the world for any price that it can get, where it actually can trade at parity. Goldman already doubled their target price on this stock. Okay, this trade is not over. It's just beginning. That's it.